Welcome back, everybody. Today we will speak about Intel. I will comment everything. We will start from the drop in their share price, which happened after the earnings of the second quarter. We will put that into historical perspective. I will explain to you what actually happened, how are they coping with their competitors, how does their financials look like. We will comment how much of cash are they returning to shareholders. We will see how profitable they are, what management guided. I will explain to you why investors and management are on the same side. We are all going to benefit from the share price increase. Basically, we are in the same boat, and a lot of other things. And at the end, we are actually going to comment their third quarter earnings, which are coming out in several hours. So before publishing this video, I will wait for their earnings and I will give you my personal opinion, because at the end, I am a stockholder of Intel. I own 50 stocks. Average price which I paid is around $51, and around 6% of my portfolio consists from Intel stocks. But as always, before we move on, I will give you a short overview of my portfolio. You can see that my portfolio is worth around almost $47,000, and compared to the last video, my cash position dropped a little bit, and the reason for that is that I actually bought 100 stocks of Dropbox. I used to have 200 stocks of Dropbox, now I own 300 stocks of Dropbox, and the deeper I investigate that company, the more I like it. So I really couldn't stand watching at it at these valuations, and so I increased my position. Not much happened actually compared to the last video. My return year to date stands at around 31-32%. So let's not waste much time here and let's go on Intel. So at this moment Intel has market cap of $230 billion. P/E ratio is actually below 10. It's 9.9, which is really low for any company at this time of elevated valuations. And dividend yield is around 2.5%. Not only that, but more than double the amount that they are returning to shareholders via dividend, they are actually returning as a share buybacks. But more about that a little bit later. And here is chart of a Intel stock price in last year. As you can see, after the second quarter earnings, stock plummeted from about $60 to below $50. In one day they have fallen more than 20%. That's when actually Intel caught my attention and I started investigating this company. And the main reason stock has fallen so much is actually that they have actually delayed 7nm CPU products. And investors were spooked because AMD already was taking their market share, and after they saw that Intel is delaying 7nm CPUs, investors were really scared that AMD is going to completely destroy Intel in their fight for market share, so consequently stock price dropped. And do you know what I like most when stock is undervalued? Share buybacks. And this is actually what management announced. As soon as their stock price dropped more than 20%, Intel announced accelerated share buyback worth more than $10 billion. So they will buy back almost 5% of total stocks outstanding. This is really big number, but they have robust free cash flow. They have also sold some of their segments for billions and billions of dollars, so I'm really looking forward to their share buybacks at these low prices. You can check here actually how much of stocks they bought back during the last 5 quarters. They are basically using billions and billions of dollars every single quarter to decrease number of shares outstanding and basically increase value of shares for other investors. I'm really wondering how much of stocks they bought back in last 3 months, and we will find that out in few hours. Not only that they are using tremendous amounts of cash for share buybacks and for returning cash to investors, but they are actually investing heavily into R&D, and they came out with 11th generation of Intel Core processor. It is really good. It is high-end processor, and as you can see here, they actually compared it to Ryzen 7, that is AMD's processor, and it outperformed it in every single segment. Another thing that I wanted to mention, that size of CPU and segments that basically they are using in production of CPUs is not everything. Perhaps we could compare it with megapixels of cameras. So if some camera has 10 megapixels and other camera has 14 megapixels, it doesn't necessarily mean that 14 megapixel camera is better. Same goes for processors. If you have 10 and 7nm processors, it doesn't mean necessarily that 7nm processor is better. There is a lot of different segments which are determining which processor is better. And you can see here how new processor from Intel performed compared to AMD's product. Not only that, but in last 10 years, Intel had a lot of delays. They had delayed 22 nanometer processors, then they have delayed 14 nanometer processors, then they had to delay 10 and now 7 nanometer processors. But that didn't stop them from growing their revenue in last 5 or 6 years from 50 billion to more than 70 billion dollars. So delays at Intel company unfortunately are nothing new. So I don't think that this time is something different and that this time we have to be particularly worried for future of the Intel because of the one delay. Not only that, but PC segment is actually stagnating for years and years. And where Intel sees its future is actually in data centers. And you can see here that revenue from data centers is growing rapidly at Intel compared to PC products that they are selling. So they are already switching to another segments where they see more compelling returns in the future. You can also see here that in 2013, PC business was actually generating 70% of their revenue. Then in 2019, it dropped to 50%. And in the future, they expect that revenue that they are generating from PC segment drops to only around 30%. And basically, they expect that data-centric business will be generating most of their revenue in the future. So Intel is not old company, Intel is not stagnating, Intel is looking at the future and it is doing a lot of great things so it can continue rewarding shareholders far, far into the future. Another thing which I really like to see is this. As shown below, our annual cash bonus structure has consistently ensured a tight alignment between payouts and performance results in years of strong and weak growth, including moderate payouts in 2018 and 19 despite exceptional financial results and strong total shareholder returns. In other words, bonuses which Intel management is getting is tightly connected with performance of stock price. So for example, in 2018 and 19, Intel generated robust cash flow and all-time high revenues. But bonuses which management got actually weren't that high because shares of Intel didn't increase that much and they lagged, for example, behind S&P 500. So they will get their Fed bonuses only if they somehow increase price of shares of Intel. So basically what I'm trying to say here is that we as investors are in the same boat as management of the companies. And that is always a nice thing to see because you can rest assured that they are 100% working in your benefit. So just a short recap of first part of this video. Investors got scared after second quarter earnings and shares plummeted. So Intel is really cheap now. Intel is not dead, they are still innovating, they are fighting. They have CPUs, GPUs, a lot of other products. If you go to their investors relation page and if you check presentations, they have like almost every single week some kind of new presentation of a new product. They are generating robust cash flow. They are returning most of that cash flow to their shareholders. And delays at Intel are not anything new. They happened previously, they happen now, and they will sooner or later happen again in the future. That's how tech industry works. If you combine robust cash flow with share buybacks, I'm 99% sure that we will see double-digit returns in the next several years. So before we move on to third quarter earnings, which are going to be presented in an hour or so, here is what management guided 3 months ago. So they guided a little bit over $18 billion of revenue and a little bit about $1 of earning per share. But what I'm more interested to see is actually if they did any share buybacks and if they did, how much did they do? Because I think that Intel at these prices is really undervalued and companies should take advantage of this situation and buy back as many shares as they can. Okay, we have third quarter earnings out. And as you can see here, they managed to generate over $18.3 billion of revenue, but their data-centric revenue declined 10% year over year. That is quite surprising, but their PC revenue actually increased 1% year over year. EPS is a little bit above $1, and they actually raised full year revenue and earnings expectations. And I even checked if they did any share buybacks. It seems that they are waiting for some kind of market stabilization before they start doing share buybacks. To be honest, that is quite disappointing for me. But overall, they generated more than $8 billion of free cash flow, so they are doing okay. They raised guidance. Again, some things are surprisingly good, but some things are disappointing, to be honest. So hopefully they will do better in the future. But as long as they are generating robust cash flow, I feel very good being invested here, and I will keep being their shareholder after this quarterly earnings.